Right now, a lot of investors are watching one chart very closely. Not Tesla, not Nvidia, but oil. Because if the current geopolitical situation escalates, oil price could move much higher. Some analysts even say $200 per barrel is possible if supply routes are disrupted. And when oil moves, the entire global market starts to react. So in this video, I want to show you something. The chart investors are actually watching, the stocks that move with oil, and also why this situation looks similar to past oil shocks. Let's jump into it. The first thing we want to do is to zoom out of the Brent crude oil on the weekly time frame. We have major levels that I have to emphasize. The first level is actually a major support around $17 right here. The other level is a psychological level around $100 and plus, because if price break this level with a big volume, the price will start skyrocketing at high speed. Right now, the market is actually reacting to geopolitical tension in the Middle East, and recently oil price surged sharply and even crossed $100 per barrel during the conflict escalation, before pulling back slightly. Why does this matter? Because around 20% of the oil global market passed through the Strait of Hormuz, this place right here. So if place is actually disrupted, the market could go back sharply. When you look at the daily, this actually happened recently because the movement got disrupted and price went higher and almost touched $120 per barrel. But because Donald Trump said something very interesting, that the war might end soon, the price dropped sharply. And recently, Iran said that Iran war's oil could hit $200 per barrel as Hormuz Strait escalates. And what happened? The price started moving higher again. So here's what investors are actually watching. If price break above this zone around $100, like I said, when we look at the weekly time frame, if price break above this level with big volume, this is what we expect in a few days, because price will start going faster and reach almost $115. So if this breakout actually happen, the next target many traders will watch is around $120 or $115, because this level is going to be very important. We will see if price is actually dancing, consolidating, or is continuing to move higher. But if panic enter the market, that's where we start talking about $200 and plus. Why am I saying all this? Because history teaches us something. This is not the first time oil shocked the world. Let me give you two historical examples. In 1973, during the Arab-Israeli War, oil exports were actually restricted here, and the global economy went into chaos. Inflation exploded and stocks struggled, and it triggered what economics call later stagflation. Here, in October 1973, the Organization of Arab Petroleum Exporting Countries (OPEC) announced that it was implementing a total oil embargo against countries that have supported Israel at any point during 1973 Yom Kippur. Also, we have the 2008 oil spike here. In 2028, oil reached about $147 per barrel here. Now, airlines suffer and the economy slowed down. So historically, we have something very simple. When oil rises too fast, markets start to feel pressure. Now, here's where smart investors start looking for opportunities. Because when oil rises, some sectors suffer, of course, but others actually benefit. The winners are actually oil companies. I'm talking about here ExxonMobil. As you can see here on the chart, the price skyrocketed since the announcement of the war on a weekly time frame. Now, Chevron also benefits of the situation. We can actually see the price skyrocketing. The other winners are actually defensive stocks. We're talking about Lockheed Martin. You can see that the price actually went higher during those moments. Northrop Grumman, same situation, because as you can see, the price is just skyrocketing. Now, we also have commodities like gold. Even though recently gold is actually showing something different, we can actually see that the price decided to go higher when you look on the daily time frame. Now, the losers are very simple, because when oil rises, all the companies using oil for moving are actually the ones suffering. I'm talking about here Delta Airlines and also United Airlines. When oil rises, profit margin shrinks. That's why we have to know when to position ourselves in this kind of scenarios and also watch oil carefully, Because remember, oil is actually the major indicators for position and world global markets. Some big investors and analysts are already warning about the situation because energy strategist Jeff Curry recently said that even a large policy response may not stop oil price from rising if supply disruption continue. An analyst said the current conflict has already pushed oil above $100 per barrel because of attack on shipping routes and energy infrastructure, which bring us back to the charts. So here are the three signals investors are actually watching right now, all breaking above the $100 resistance here. Escalation in the Middle East conflicts, supply disruption in the Strait of Hormuz, because if those things happen together, oil could move very quickly and the ripple effect could hit stocks, inflation, interest rates, and global markets. Markets move on supply, demand, and fear, and right now oil has a little of all three. So the real question investors are asking is simple. Is it just another spike or the beginning of the next global energy shock? If you like this kind of content, don't forget to like, comment, and subscribe, and let me know in the comment what you actually think about this situation. See each other next time. Have a nice day and trade safe. Thank you for watching.